third quarter of this year was rife with bearish sentiment leading to risk-off actions in global capital markets. Vetiva Capital Market has a new report that looks at the third quarter capital market meltdown. Shanghai Composite Index, mainland China, down 11%. The MSCI World Index down 6.5%. The DAX in Germany down 5.6%. It's just red everywhere. Joining us to discuss further is the author of the report, Chidozie Daniels, capital markets analyst with Vetiva Capital Management Leader. Chidozie, very welcome. Good morning to you. Let's get it on. So we've got this, well, let's put that chart up. This big blood red chart. Yeah, there it is. Good gracious. So what do we attribute all this to? I mean, you're just seeing red everywhere. The third quarter was just ugly. Was this central bank rate hikes, recession fears, or a cocktail mix of factors? What happened?
Thank you for having me on. So what we've basically seen in the third quarter is investors' reaction to the latest rate hikes from central bankers around the world. We've seen the Fed raise rates to about 3.25% in response to inflation. Now, why are we seeing broad-based sell-off across global markets? When you have rate hikes, we believe that investors avoid the equities market as a result of this because they will pursue higher interest rates in the fixed income market. But also the fact that higher interest rates tend to weigh on global growth. This drives up the cost of borrowing for businesses, but also the cost of servicing governments. So what we've seen in global markets is basically investors reacting to the rate hikes and the potential impact on the global economy. So recession fears are in there, but those recession fears have been heightened as a result of the rate hikes. When you have rate hikes, you have a restriction of liquidity to the market, and this makes it difficult for risk-on assets such as equities, alternative investments like Bitcoin, for instance. When you have this rise in risk of sentiment in the market as a result of these rate hikes, you expect to see a shortfall. I mean, you expect to see losses in the equities market as investors pivot from equities into fixed income.
Okay, great. Now, so thanks for setting the stage. So you look at your Jerome Powell's, your Christine Lagarde's, which of course, Fed governor, then of course the ECB head, and then Mr. Andrew Bailey. They've all had one level of drama or the other. Looking ahead at the fourth quarter, because we know the Fed is looking at they're going to raise. I think tomorrow the ECB is going to hike as well. Yes. Bank of England, I hear the Mr. Sunak and their new budget outlay, which is coming forward, has been delayed to allow for the Bank of England to make a decision. So if you look ahead to the fourth quarter,
yes,
are the market's going to price that in, or are we going to see another bloodbath in the fourth quarter due to more hikes from these guys?
I believe investors are watching for inflation prints in these main countries.
Okay.
When you see, if we expect to see, if we see rises in inflation, there's a very possibility that the central banks will raise interest rates. So I don't believe that's been priced into the market yet, as there are still lots of factors and other drivers that investors are watching. So the key driver to monitor would be where inflation prints, because it would give us guidance on what direction the central banks will be going in.
Okay, let's move to Africa now. Another chart here, which looks at, I think, the returns, and we put a little blue arrow on that one Q3 return, which I think was for Kenya, the Nairobi Securities Exchange. Looks like Kenya performed better than their peers. Would you look at the NGX in Nigeria, the Johannesburg Stock Exchange, JSE in South Africa, the GSE, which is Ghana, and then the Frontier Markets Index, which I guess aggregates everything. So what? And I think we have another chart after this. Why did Kenya come out ahead? Okay,
so we had political risks in Kenya, which had triggered sell-offs at the pre the election. Now, following the election, we saw improved investor confidence, primarily from international investors, which then led to, I believe, about 13 billion shillings in of inflows into the Kenyan market. So, as a result of the election, which the Supreme Court ratified, because it was challenged by Odinga, I believe.
Yep.
Yes, the victory was challenged, but following the ratification from the Supreme Court, which ruled that William Ruto was the winner, we saw improved investor confidence from international investors flow back into the Kenyan market. So that was what drove the gains towards the end of the quarter in Q3.
See, so it's interesting how elections have consequences and elections have impacts on markets. So looking at Ruto going forward, what kind of impact do you think he's going to have on the markets?
It will, I believe investors will be monitoring how they plan to address the inflation situation in the country. Kenyan inflation is about 9.2%. That was the last print for the latest month.
Yeah.
The central bank in Kenya as well has also been raising rates, but also investors will be paying attention to how he plans to address the economy moving forward, given that we have a new administration in place. So investors, given how investors behaved and reacted to the election decision in Q3, we expect this to be positive for the Kenyan market, and we believe that the Kenyan market should fare well in Q4.
Well, good for them. Good for Kenya. Bring it to Nigeria now. You got another chart looking at some sectors for the Nigerian Stock Exchange. Yes. The industrial sector down by about 17%, yes. Consumer goods down by 6.3%, and oil and gas down by 6.8%. What was there? Is it the same general meltdown from everywhere else?
It's the primary risk-off sentiment that we've seen from global investors that has also filtered into our local market. We already know that our central bank has raised rates twice this year, so to about 15.50%. So we've seen some fund managers exit the equity space into the fixed income space. So primarily that was what really drove the losses that we saw across the broad-based losses that we saw in the NGX in the third quarter.
I want to ask you in particular, again, it's the sector, the Q3 sector chart for Nigeria. The industrials for cement. So industrials are down 17%. Now, a lot has been said about infrastructure in this country, right? Yes. The President Buhari now, at the last ministerial retreat, he talked a lot about how many roads had been built, right?
Yes.
In fact, we just played there's an ad from one of the biggest cement producers in the country on the roads that they're building. Right. So look, when you look at all the infrastructure demand in this country and how much, the governor of Bayelsa State, he talks a lot about how many roads he's built. How is it that you've got industrials down by double digits, but it's this bad? Shouldn't it be the other way around? When you think about the demand for infrastructure and building and this and that, shouldn't the industrials be doing better?
Yes, the industrial space is actually doing okay, but it can definitely improve. Given that over the next 30 years, we're going to need about $3 trillion in investments into the sector. And we're currently not doing near that amount per year. But as I had earlier mentioned, as you can see from the indexes, the losses were broad-based. DANXEM, particularly the quarter, closed lower, and it's a big market cap company, so which also affected the performance of the industrial goods sector. But as I earlier mentioned, the sector is doing okay, but there's definitely room for improvement. There's about a $3 trillion gap in infrastructure that remains to be filled, and this actually presents a unique, interesting opportunity for the industrial goods space, which we believe that over time they will be able to improve their performance. But like I said, we have global risk-off sentiments across all sectors, and that filtered into the Nigerian market.
I gotta ask you, we just put this chart up where you saw you're looking at by market cap best performances, and I think there's a very, I don't know if this was you, this was bad luck, but so Airtel Africa, best performer, I think that's 1 year, right? Yeah, yes. So 1 year. And in fact, it was one of the few sectors, it along with Boa Foods, that was in positive region in Q3. But Airtel last week.
Yes.
What was it, 27% drop?
27.10, I believe.
Good gracious Lord. Well, so what was behind that?
Okay, so we already know that Airtel, due to its dual listing on the London Stock Exchange, we've seen some investors use it as an avenue to move out FX. To repatriate their FX investments in the country. So what triggered the sell-offs last week was that we had some investors looking to take advantage of the arbitrage opportunity by selling their Nigerian listings and then looking to buy it on the London Stock Exchange. So we believe that was what primarily drove the significant losses that we saw in Airtel last week.
Incredible. Right after you put that chart where they did well for the year.
Yes.
Ghana, we got to quickly talk about Ghana. My word. Ghana, the issues, this is their third consecutive quarter-on-quarter loss. What's happening in Ghana? I mean, worst performing currency, the CD, they're looking to money in the IMF and their market is down. What's happening there?
So we've had, Ghana is dealing with primarily fiscal concerns. There's also a large FX demand that's been failed to be met by the government. So I believe last week or so, the bank had an auction. The Bank of Ghana had an FX auction where investors asked for 100 million.
And it was only
25
yes. 25 million.
It was only 25 million that they were able to offer. So in the response to that, we saw the CD fall drastically in the 2 days after that. And that's just primarily been the issue with Ghana, is that their FX liquidity concerns. You have record high inflation. Inflation is last print was about 37.2%. It's been accelerating for the past, I believe, it's been accelerating for the past year.
Yeah.
Pretty much, investor confidence in the country is low because of the FX challenges that they're facing, but also the fiscal challenges that they have. Ghana has a lot of debt that it took on in response to COVID, and that has weighed on the country's FX reserves, which, as you can see, has also affected investor confidence in the country.
We only got 30 seconds left. Is there a buying opportunity with everything that we've looked at here? Bargain hunting, that's to say.
We believe investors should primarily focus on safe fundamental stocks. We've seen a lot of sell-offs across global markets, and in particular with Africa. There's a risk of sentiment to our markets from international investors. They'll prefer to choose the safety of the US dollar due to the rate hikes.
Yeah.
And as a result of that, that will definitely continue to weigh on investor confidence in our market. But however, we believe that there are select fundamentally sound counters that investors could look to snap up in the last quarter of the year.
Great report. I really enjoyed reading it. We're out of time. There's so much more we could have jumped in. South Africa, for instance, we didn't get there. But look, we'll have you back. We'll talk more about this really great report. Chidozie Daniels, Capital Markets Analyst with Vetiva Capital Management Limited. Thank you so much.
Thank you so much.